Proud supporters of Africa this week. Engine, with us, you are number one.
The African Development Bank launched the African Economic Outlook this week, a report which includes an original macroeconomic forecast for the region. Lerato Mbele spoke with the bank's chief economist, Mthuli Ncube, and asked him to what extent growth in Africa was impacted by the crisis in Japan, North Africa, and the rising oil and food prices.
Sub-Saharan Africa is doing rather well, actually, going forward at 5.5% GDP growth. That's our forecast for the year. It's still within expectations, and that's quite strong in the environment globally. The issue really is North Africa, where Libya is expected to grow at minus, 19% or something like that. Any large figure, negative figure, frankly, will do. There's a war going on. Tunisia at 1.1%, Egypt at 1.6%. Algeria is still doing okay, and Morocco to an extent. So it really is about North Africa. That region is going to grow at 0.7% compared to 5.5% for the whole of Sub-Saharan Africa, including Cote d'Ivoire.
If the world is expected to grow on average somewhere between 3.2%, and Africa's in the 5% region, and next year it's anticipated 5.8%
That's
even.
right.
What keeps Africa so buoyant?
A lot of things. First of all, it's about the economic management, the quality of economic managers we are seeing coming through, central bank governors, ministers of finance. Number two, the strength of the commodity prices. While you see blips down, up, because of China, this and that, it's still a very strong, positive super cycle for commodities. Of course, there are risks. The food crisis, as we said, food prices, political risks here and there, now drought in the Horn of Africa. It's still a positive story, though, and there are good reasons for us to be optimistic.
Obviously, Africa has started to trade a lot more with economies of Asia and the so-called emerging markets, and that's pushed up the trade dividend for Africa. To what extent is that a denominator influencing growth?
Yes, certainly the effect of China and India and Brazil, Turkey, Russia on Africa is fairly strong at the moment, particularly China, especially for resource-rich economies. It's very positive. I think the issue is how can Africa take advantage, can exploit that opportunity better going forward, but it's a positive story for Africa.
And materially, how is Africa benefiting? Because, I mean, we're saying increased investments coming through from China. It's the #1 trade partner. Trade in total has increased 37%, blah, blah, blah. And yet, Africa's contribution to global trade is still below 2%. We're still not exporting the volumes that we need to be seeing to really drive this economy in the way in which exports have driven and changed China and the Asian tigers.
Absolutely. Africa is still a small player globally in the trade kind of numbers. 2%, is quite small. Really, that has to do with the lack of diversification of Africa's manufactured exports and other economic activity. Really still about resources, raw materials, whether it's agriculture, but many minerals, oil and gas and so forth. That's still the export story. So what's really required is diversification going forward.
What North Africa demonstrated to the world is what happens when you've got a huge young population that's unemployed. It creates social implosion. In some of the key economies of sub-Saharan Africa, that is festering as a problem. South Africa's got a major unemployment issue, and it's young people unemployed. Nigeria, similar thing. In Kenya, similar trends starting to emerge. How serious is the situation of structural unemployment?
It is very serious. We have got this youth bulge. They are unemployed and they are connected globally. It's using Facebook, Twitter. They know what they want. They want the same thing as other youth in other parts of the world. Of course, youth unemployment is a global phenomenon right now, but it's more serious in Africa. The ability to self-organize is something that leaders should look out for to make sure that they must begin to do the right thing. It's one thing to push these policies, nationalization and so forth, but at the end of the day, people just need jobs. They need entrepreneurship opportunity, and that's what leaders should focus on.
Are leaders responding to the problems as they manifest themselves? Because if we're talking about growth being predicated on commodity exports, the economy is not changing structurally, or is it?
Absolutely. The economies are changing too slowly structurally. Although there are pockets of progress, such as Nigeria, for instance, where agriculture and services are beginning to be a big contributor to GDP. And that's just one story, and it's too slow in my view. Certainly issues around access to finance. Even then in Nigeria, with agriculture's contribution to GDP, it only accesses less than 2% of credit from the banking system. So diversification is what is required. There isn't encouragement from East Africa because it's got very little natural resources by comparison, and yet the economies are doing well. Really, we must look at that region to see what else can be copied by the rest of Africa from East Africa.
South African wage talks in mining and related industries have started, and following a pattern of recent years, many of the union's demands are far above the official inflation rate, which was at 4.6% in May. Patrick Craven, national spokesperson of South Africa's biggest trade union, COSATU, had this to say.
On the contrary, we think they're very reasonable. The context to all these wage negotiations is the fact that we are the most unequal society in the world. And if workers get increases that are the same as the rate of inflation, that gap isn't getting any smaller. In fact, it's getting bigger in absolute terms, because 4.6% or whatever it is of a very low wage is still a very low wage, whereas 4.6% of a million, which a lot of employers get, is obviously far bigger. So that's why we're absolutely right to demand real increases. So in other words, there is actually more spending power in the workers' pockets.
I think if people are not questioning the sanity of the demands, they're questioning the timing, because it comes at a time where South Africa is growing, but very, very slowly, bucking under the pressure of a sluggish global recovery process. And mining houses in particular, hard hit, their margins are significantly lower than we've seen in recent years. And there is that consideration to make. If they do give in, ultimately they're going to have to retrench workers.
No, we would dispute that. One of the main problems with our economy, which the more thoughtful business people themselves appreciate, is the very low level of demand, because so many workers are either unemployed or employed on very, very low wages. And so it's a complete myth to think, well, if only you can keep wages down, then the economy will thrive. It won't. It might help one or two employers in the short run to be able to cut their wage bill, but all it means in the long run is that even less money is being spent in the shops, is being spent on services, which is bad news for the economy. You cannot build an economy on the basis of poverty wages, and that's what many workers earn at the moment.
I mean, you're saying it's a myth. Many people would argue it is not a myth, it is a reality. When you look at unemployment in the region of 25% at an official rate, when you look at corporate earnings, there is a problem here. There's a skills problem and there is a productivity problem. South African exports declined in the region of 20%. Even officials recognize that. In general, South African labor not producing what we ought to be producing in order to grow the economy at 6 or 7%, which is what's needed to absorb so many people who are unemployed.
You're right about the skills problem. You're right about the productivity problem. But they are not the workers' fault. They shouldn't have to pay the full price for the fact that management cannot organize their industries in an efficient and productive fashion. And you can't blame the workers for the fact that our education system isn't producing enough workers with the right skills. They're problems which we have to tackle. But in the meantime, you can't say, well, in order to solve this problem, we will keep wages down, if possible even lower. There's no relation between the two.
I don't think they're saying in order to solve the problem, but what they're definitely saying is if you want to employ more people without the skills, you're going to have to keep wages competitive, because South Africa is not just an island. We're now competing with China and Asia and exports coming in from emerging markets, and they produce at considerably less cost to what happens in South Africa. This needs to be a competitive economy.
In the case of China, they can keep wages low because for years workers have had no rights effectively to organize and to demand better wages. That is changing. Their workers are now starting to go on strike. And I'm sure that their employers are saying exactly the same. Oh, if we agree to your wage increase, you won't be able to compete with these South African workers. It's what we've sometimes called a race to the bottom. That all employers all over the world are saying, well, we must keep our wages down so we can keep up with these other employers in other countries. It's all ultimately self-defeating. It will lead to a lowering The problem I mentioned in relation to South Africa of a lowering of demand, it'll happen all over the world.
In Nigeria, labour issues are also in focus. The main labour unions have given the government a 2-week ultimatum to pay workers a minimum wage agreed to a year ago or face a nationwide strike. Lerato Mbele asked Peter Esele, President General of the Trade Union Congress, for more details concerning what had failed in Nigeria's labour industry.
The minimum wage in Nigeria is a law, and the state governors were part of these laws. They were part of the negotiation. We had a negotiation that was now taken to the National Council of State, which moved from National Council of State to the National Assembly, and it was passed to the National Assembly and signed into law by the President. So what we are saying is that we expect the governors and the federal government to respect the law. We are not asking for anything more. We just want to ensure that Nigerian laws are respected.
Now, it's ironic because apparently state governors were part of the negotiation for this minimum wage of 18,000 naira, but it's the Forum of Governors that's come back and said that there are going to be challenges in implementing it across all states because some states are smaller than others, affordability issues.
What we have just done is to peg a minimum wage. States who can pay higher can go ahead and pay higher amount. We have also looked at all the states in the country, and we can assure you, and we know that they can pay. What the states need to do is to go ahead and say, okay, fine, we have to cut a lot of, we have to cut the cost of governance. It's government in Nigeria is very, very expensive. And why are we saying this? I'll give an example. You have a state in Nigeria that we say is a very small state, and the security vote for that state is 5 billion naira. 5 billion naira, you are looking at about close to about $20 to $30 million for what? So what we're asking for is, if that small state, and you now divide the 5 billion naira times 12, you're looking at about 409 million naira every month as security votes. And that state I'm talking to you now is not Lagos, which is one of the richest in Nigeria. It's not Rivers, which is in the oil delta. Neither is in Bayelsa or Delta. So if you can have that from a small state that I will call landlocked state in Nigeria, wanting to spend 409 million naira on a monthly basis on security votes, that tells you they have enough money.
Right. Okay. What's the response, Peter, of the private sector? Because ultimately a minimum wage can't just be exclusive to public sector workers.
The beauty of this is that we are not even having problems in the private sector. That is why it's so strange for us. The private sector were part of the negotiation. Our initial demand was 52,500 naira. And the private sector came up and said, if we do 52,500 naira, it's going to be too high. And we took the media. The media came to about 26,000. And then the small-scale industry says, no, we can't pay 26,000. And that was how we were able to drag it down to 18,000 naira. With the state governors had their representative in attendance. And so the private sector, through their organization, they also have their own organization, even took a paid advert in the papers supporting our position, that they were part of this and they know they can pay.